Welcome, everyone. I'm Jed Leidheiser. I'm a partner at March Capital. I lead our cybersecurity practice, and really excited to be here today with four esteemed panelists. Let me just give you a quick background of the topic at hand. I think as we look in the marketplace of cybersecurity, what we see is there's 60 public cybersecurity companies, and behind that is another 1,200 that have some kind of institutional backing or funding. And so I think it's very hard to make sense of, what some of these cyber companies even do and how they differentiate with each other, much less which ones have become, massive exits, big platforms, et cetera. So that's an ambitious topic we're gonna, try to address and dissect here today. On my left, I have Greg Keller. Greg has had pretty much every role in the executive suite at various companies as a serial entrepreneur. He is currently the Chief Strategy Officer at JumpCloud, as well as one of the co-founders. He is joined by Josh. Josh is the co-founder and CEO of Coalition, one of the rare companies that merges fintech with cyber, particularly in the cyber insurance play. So excited to have his perspective here. Coming from a slightly different perspective is Austin. Austin leads venture efforts at Okta, public company that we all know and love. Done a number of investments and brings a global perspective from both the US and Southeast Asia. And finally, Neha, sorry for getting you out of order here. Neha is a banker we all love. She leads cybersecurity practice at Macquarie, previously at Goldman Sachs, and really brings a good perspective how to navigate both the public and private market. So I think we're all curious to hear that today. I'm very excited. I want this to be an open conversation. I want the dialogue to flow. I certainly have a list of questions, but at the end, I'll turn the mic over to you as well in the audience to ask a few, because I think this is an important topic. So let's get started. I think first and foremost, it's critical to find what is the platform. As a VC, I see PowerPoint decks all the time. Everyone says their vision is to become a platform, but Greg, if you could help just scope what a platform means for us, that'd be very valuable. Is it a technology? Is it a corporate strategy? Is it go to market? Is it everything? Is it nothing? Like what does a platform mean in your mind?
Great question, and it is the greatest premeditation that any entrepreneur can actually do when sort of putting your thesis together for the business. So those things that you mentioned are true. Like to me and to my founding team, we did desire to build a platform before we told anyone, before we raised any capital, and generally there's a technology component, there's the business or flywheel component, and of course, as you mentioned, go-to-market, which is really the most critical part to the platform. So as we sort of moved into this world, we knew that to do these three things, you can't be a singular product. You have to really show the ocean and let people fall into it, let your customers fall into it. So that, generally speaking, was what we did.
That's a great Los Angeles analogy,
Yeah.
given where we are. I want to dig into, you mentioned kind of three areas, all interesting, all meaty, et cetera. Let's kind of start from the beginning, if we will. So, I'm maybe an entrepreneur in the audience that's starting a company, thinking about starting a company. Product is probably one of the areas I'm focused on first. What decisions am I making in those early days that can allow me to become a platform? Like, what am I saying no to, or what am I really prioritizing my time on?
You need to start to get your chops together to convince your investor syndicate that they're going to play the long game with you. I think that's one of the most important things to really, this is building platforms means scale. It means you are focusing on broad concepts, not singular concepts, and you're thinking about how your flywheel over time is going to operate. In our world, optically, net revenue retention means everything. We weren't even using those terms 8 years ago when we built the business. They existed, like net dollar retention, net revenue retention, but we were thinking conveyor belt. How would the platform provide a mechanism to basically channel new things, whether we were organically building it or otherwise inorganically perhaps acquiring things. Like we were really thinking about this very early on. So when yes, I am like the CTO and the nerd of the thing, but the business model meant everything in the early days. It really informed how we were making architectural choices on the platform, like literally down to the code. If we do this, how will we instantiate that conveyor belt concept? Because it could break down if we made different architectural choices. So it was an interesting concept where, like, typically you have, when you build a company, you go fast, you put out MVPs, and we did, but for our early engineering team, it was their first experience, truly, at understanding the business model mechanics. Because in the rooms, in the whiteboarding and everything that we were doing, we were showing that in real time, myself and Raj Bhargava, the CEO, about what we wanted. So again, long-winded way of saying, this is a different look and taste and smell when you build a company from, you have to have that energized spirit of, this is the thing we want to build, right? But on a much grander scale.
And, Joshua, I'm curious to hear your opinions. I mean, we talked about the business model, but let's kind of focus on the kind of the architecture. There's data architecture, there's tech. You can break it down a lot of different ways. You don't want to spend 10 years building a quote platform. You got to solve some pain points for the customer. So how did you prioritize at the early stages? What decisions were you making?
Yeah, maybe not well is the singular answer to that. I think architecture is incredibly important. Like, there was an element of platform that we knew we were going to build. Of course, we combine a financial service, insurance, with technology, a security platform. And the particular strategy that led us to do that was commoditizing things that were complementary to us. So our software platform is free. It's very disruptive. If you're a company that rhymes with Ritzsite or Recurdy Scorecard or whatever, I don't know how to do the rhyming. It's like that for free. But of course, it's in our interest to provide those tools, those services to our customers because it can lower losses. It actually makes the insurance more profitable. It increases our competitiveness. So that's what we knew we wanted to do, and we architected for that. And it's been wildly successful. But of course, we then got to a point where it's like, oh, wow, we have an insane data collection infrastructure. We're collecting not just cyber data, but everything about a business. Now we want to go sell other insurance products. And today we do. We sell directors and officers insurance, employment practices liability insurance, very sexy products. So just come up to me afterwards if you want to buy one of those. But it's like, that was not something that was planned for, and the technological debt and the re-architecture, is maybe what I'll call it, was a very painful process. So that, in hindsight, that's something that I wish we had done, and I absolutely agree. You have to be very thoughtful about that from day one. But there are trade-offs. Did we make the right ones at the right times? It's easy to say in hindsight, I wish we would have built for this bigger, broader future. But on the other hand, we're also just trying to execute as fast as we can.
Right, right. And Austin, I'd love your perspective. I mean, you've been at Okta for a number of years and have a lot of experiences there. Were there trade-offs made in the early days around how fast to go versus one product, multiple products, ecosystem, et cetera?
So the concept of the platform and the integrations that were required for Okta to grow actually started around 2013, 2014, so quite some time. Okta is now 12, 13 years old. And so we started the Okta integration network all the way back then. We now have 7,000 integrations. And if you look at Auth0, which we acquired last year, they set up their marketplace, so they're much earlier in that journey. So now we have sort of two major platforms that we're working with, one on workforce identity, another one on customer identity. But in each case, I mean, it's essentially, what's really nice about this panel is that you have Greg and Josh talking about building a platform. Okta is a platform. I joined 2.5 years ago, and starting up a venture program is the sort of next step. After the platform's been built, you think about how to accelerate it. So contextually, if you go back and look at the venture programs have been set up in this cloud software world, 2009, 10, Salesforce Ventures was built, right? So that was almost 7, 8 years after they had created a lot of the core product that existed today. And then we took a lot of the learnings when we were thinking about our design principles for Okta Ventures off of Slack Fund, right? So they invested in early ecosystem folks that were building on Slack, and we wanted to invest in folks that were on our platforms, right? So Okta Integration Network, Auth0 Marketplace. The thought process was, how can we create shared value with these partners? And so it's just a natural offshoot, I think, of what happens and the value that you create after the platform has been built. So I'm a very small part of a story, and it'd be interesting to see what the next chapter will be, because essentially if you look at something like Salesforce Ventures, their scope, right, for investing in their ecosystem has grown dramatically. I mean, not only are they making a lot of investments, they're investing in all sorts of different technologies. And one of the things that's really exciting about Okta Ventures is people think, well, I assume that you invest in just identity. That's actually not the case. we're investing in all sorts of different categories, people that are selling to CFOs, to CSOs, to chief data officers. The context, once you've built a platform, the ability, the surface area for investments is really strong because you have made something that is wide and also interoperable, right? And so it's really amazing. I mean, we were just talking a second ago, Josh and I, before we got on stage. I mean, Okta has tons of overlap with cyber insurance. We have people in the field in our sales org talking about cyber insurance all the time. And so suddenly you start to think, well, should Okta Ventures be investing in this segment? And it just goes to show at the same time as well, you started expanding your product platform as you start to see different partners in your ecosystem sort of inform some of the product design choices you make. So it's really interesting to be on the panel with these folks.
Awesome. And Neha, you look at a lot of companies. Some are out for kind of M&A. Some are trying to go the distance for the public markets. I guess for the ones that are a little bit earlier on or mid-stage, is there like a question or a set of questions you kind of really drill in to say, hey, do I think this company's going to get a high valuation? Is it going to be able to be attractive to the people on the other side?
Yeah, I mean, I think when evaluating early stage companies, you really want to understand if that land that they have, the land motion that they have is something that is going to help them, grow into their customer base or not. Because, I do understand the challenge with that founders have that, you cannot like start off being everybody to, everything to everyone. You have to start with solving like a particular problem, especially when you're trying to disrupt a particular space. So it is definitely a difficult decision to make, but I think what you really want to understand is that niche or that problem that the startup is solving so limiting that it would not turn into a platform going forward, or what is the opportunity going forward. So that is basically from an investing perspective what you would want to tease out. And I think different investors both on the public and private markets have different views of this thing. I think from an investing perspective, what you really want to get conviction in is where is the growth going to come from? Is it from the scalability of being a platform, or is it going to be from the dominance of being a leader in the niche of the product that you're selling, right? And it's all about like assessing that opportunity and seeing what decisions can be made accordingly.
Yeah, and Austin, I know when you look at early stage startups as part of Okta Ventures, which is something you do on a regular basis, what mistake do entrepreneurs make when describing their solution?
Well, geez, Jed.
Say they're not a platform.
Now I'm going to sound like a really bad person. Probably the thought process is usually overselling something that's earlier, right? So almost every startup would want to be a platform of some kind, but it's very difficult to see that in the early stages. And occasionally you'll see glimmers of an architecture that may lend itself for a platform later on, but usually by the time it's Series B or C, that should be articulated. So at seed, Series A, I kind of discount any discussion around that. It was really interesting to hear you, Greg, talk about some of those product decisions. I don't know if there's any one particular product decision that you could highlight that you had to make in order for the platform to work, but I don't have that many discussions with startups that are doing that kind of thing, or if they're really early, they're setting up a marketplace that, it's essentially crickets, right? It's very quiet place that's not being populated. I can think of some examples, some of your competitors actually, I think, where they see a platform where they could cross-sell other insurance products or other technologies, but it just doesn't have the scale to do it. So it's very difficult to tell a story of platform until you've actually matured to the level that it makes sense. But I'd be curious actually, to ask you a question. What was like an example of that product decision you made early on?
Think about it like this. We have product teams that are in various categories. So if you took the platform and boiled it down, you'd have these major chunks of what are considered very large market areas. Core identity, like a directory, like Active Directory, multi-factor solutions, single sign-on solutions, device management solutions. We do elements, and a steel thread of the platform is zero trust enablement and using data to really sniff out patterns of usage, like all these things. So think about the long-winded way of answering your question that I will keep short is it's like a Sophie's Choice problem. There's a lot of things that the platform can support, but we practice brutal prioritization. We can't attack all of the multi-billion-dollar markets, but so we always think the thesis is, and I'm not giving away any playbooks here, but is natural emanation from the core identity. When that employee needs access to something, what markets service that action? And when you think about that, when we teach our product managers when they're new and they haven't quite been exposed to this industry, but they're very good performing PMs, we need to teach them that playbook. And part of I do all the onboarding still. Like, we're 780 employees, and I can't not tell that story so that you start to ingrain the DNA, right? And now our executive leadership does similar. So again, kind of a long-winded way of saying it is a Sophie's choice problem, but we do have axioms that we teach so people don't stray off. And before you know it, you're having a hangover. And that is not a market we should have attacked and spent untold time and money. And again, in the spirit of, I know what you're building too, time is everything right now. The instant we get a logo is the instant it starts expanding for us, right? To do that, you have to have the right natural progression of that flywheel and what they choose to purchase in an initial package and then expand into. It's got to make sense, right?
And Joshua, how do you approach those kind of product decisions? Because a lot of times you have to decide before the market has really decided, right? You're making a projection, and you got to devote the development resources to A versus B versus C.
Yeah, look, you have to have a North Star, and you can only have one North Star. I think when building a platform, you definitely don't want to get caught in a trap of just building things to build things and piece them together. And so in our case, it's like we know what it is we want to accomplish. Like we today are the leading provider of cyber insurance. We want to be the dominant provider of cyber insurance, right? If you look at the auto insurance industry or the home insurance industry, it's a winners take most market, right? The probably top 10 players have 75% market share. The number one has 20. If we have 20% market share of the cyber insurance market, like that is a big, big company 10 years from now. And so for us, singularly, that's the goal. Everything else we do has to support it. And so you could say, well, why does selling directors and officers insurance support that goal? But that is the thesis, that it will help us increase our dominance in cyber. So for us, that's how I go about making those product decisions. It's always remembering the singular goal we want. And because I don't make all the decisions, it's making sure the PMs and everyone else in the company knows what the North Star is, which is its own its own issue.
And I'm curious, and Neha, this is a good question for you. There's a lot of companies that have great growth, have done well, but maybe they are product companies, right? But that product is quite good. But the company's been around for a number of years. Let's call it 5 years. Is that company screwed? Is it kind of impossible for them to become a platform? Has the decision already been baked into the DNA of the product or the company, or is there, in your opinion, kind of opportunities to expand?
No, there are several examples of companies who started off as great product companies solving a particular problem, but from an exit perspective, that doesn't mean that they have to do everything on their own. There are several companies, especially strategic acquirers, who would pay a really good multiple to round out their product portfolio and acquire that kind of product. And you're seeing that in the M&A market now as well. Buyers are getting pretty aggressive. Obviously, a lot of that has to do with the valuations in terms of where they are at, and the lack of exit opportunities, as it relates to the IPO and the equity capital markets. But I just think that a good product company, it should not be product led. There has to be the product and go-to-market fit for them to really be able to scale it and to get to a place where they are at a good scale and they can think of investing in adjacencies and really start building out a platform. But I've met several companies where the product is excellent, but it has been a very product-led company, and they haven't really invested in figuring out what would be the right ideal customer profile where they cannot be everything to anyone. Finding that profile and selling successfully to that profile and scaling that way, I think is something that they should focus on doing if they want to stay independent. But there are several exit options that still continue to remain for players like that, because as we're seeing from the Guardicore transaction, which Akamai paid a really good multiple for, there will always be strategic acquirers that could, pay a pretty good price to round out their product portfolio. But I think the other thing is also like building the ecosystem, as Austin was mentioning, through partnerships and integrations, which helps them get a bit more broader in their ecosystem and attack more of the budgets that are available out there.
Yeah, I mean, the ecosystem is a thread I would love to pull because it seems like sort of an obvious thing you want to do. You want to build a community, you want to have others to be a platform, right, and kind of make money off you. You want to incentivize them. But how do you incentivize them at the earliest stages? You probably have two sides, maybe some businesses have multiple sides, right? How do you kind of solve that chicken and the egg problem?
That's a great question. I mean, for us, we wanted to make our products sticky, and that meant going deep into the organization. And I think one of the things, going back, Austin, to like why it's difficult for the insurance and the security worlds to come together, it's like our buyer is typically a business owner or a CFO. Oftentimes the buyer of, obviously, a cybersecurity company's products is a very different person. Some of our success was, how do we bridge these two together? So once we get the CFO to sign the insurance policy, they immediately invite or tell us who the IT or security users are, who then get invited in to use the technology products. So we've brought these people together. Of course, if you turn the insurance off, you turn everything off. And so that's really where we tried to create quite a bit of stickiness and start to build out that platform strategy where we could sell different products into different parts of the organization, but they tie together. And so in order to qualify for insurance, you have to implement MFA, or if you want a discount, you have to do this. And so it's, in our case, we have the purse strings, like we have carrots and sticks to incentivize behavior, or we can beat people with them. You can't renew your insurance policy unless you do this. And this is the type of insurance market right now where we can absolutely beat people as much as we want. It's very difficult, as Austin can tell you. That's one of the reasons why interest in these products has risen quite a bit, but that's been our approach.
Awesome. And then just kind of a brief kind of segue. I would love to hear more. I'm sure the audience as well. Like, how popular is cyber insurance today? Do most people have it? Is there a stat you think of? What's that kind of market looking like going forward?
Yeah, sometimes I joke that everyone has cyber insurance. It's just some people pay for it and get it from a third party, and everyone else is self-insuring. So maybe there's, I'd say 30–40% of businesses actually purchase a cyber insurance policy, and the demand has grown astronomically. I mean, we're a 5-year-old business, and we'll do nearly $1 billion in premium this year. We have over 140,000 customers, and we're only operating in the United States and Canada. So the demand, I think, is skyrocketing as awareness grows. And of course, all the horrible things that are happening in the cyber world, whether it's Russia, Ukraine, or Log4j, or Colonial Pipeline, are just driving quite a bit of awareness. And the industry is maturing as well. Like, the past 18 months have been extraordinarily difficult from a loss perspective, but I think the product is finally getting broad enough to where it's fulfilling a real need. If you actually look at the insurance market data, last year, 6% of businesses that purchased a policy filed a claim in excess of their deductible. Like, that's a higher percentage than most other insurance products. You're more likely to file now a cyber insurance claim than like a workers' comp claim, and yet 100% of the businesses here buy workers' comp because it's compulsory, and relatively few purchase cyber. But it's growing. Whether it becomes a compulsory product, I don't know. I think it effectively will, because businesses will require other businesses, just given the contractual liability to purchase it.
Yeah.
I mean, one of the reasons that we were sort of talking, because we connected maybe a year and a half ago, and I reached out because I could see in the field CFOs telling their assistants to run calls to figure out what is this thing called MFA. And so I started talking to Okta field reps. I remember one call in particular, picked up the phone with this guy in Boston. He's like, it's literally what I lead with every single time I talk to a customer. And I was just on the phone with 3 CFOs last week. There's no sales enablement material at Okta talking about how to talk to a CFO, because that's not our persona. But you could start to pick up these really interesting, I'd say, like early warning signs of new and growing markets when you're as big a platform as Okta. Yep. And that's when you can pick up the phone and find new and interesting partners that you can work with. So it's really fascinating to see. I mean, we all have signals coming from our field and our sales folks that inform, how should we make this platform wider, perhaps, to incorporate more financial tools at Okta, which is not something that is the first thing that comes to mind when people think about a cybersecurity company.
Yeah. And Greg, just kind of off that point, I mean, how did you think about on the build side, building your ecosystem, right? I mean, I think ecosystem probably means different things to different people, much like platform does. So curious how you started that at the early stage.
There's a, it's an interesting spot to be in a business when you control access, right? Be it a human to something that they need, like their computer or a network or something. Equally, when a machine needs to contact another machine, non-human. So these kinds of interactions and exchanges. So if you just start with that premise, it's really interesting how many things start to associate itself with that, just that basic principle. I need access to something. Give it to me. If so, let me tell you how I am authorized once I'm in that thing. So to your point, the tangential areas of businesses that we are seeing that I guess for this audience that are very interesting. I think the HR world is getting very interesting. The life cycle of an employee as they come into their world and how that interoperates itself with access control. So we work deeply with you've probably heard a ton of these different HR companies from Namely to Bamboo to Workday to that sort of uniformity of workflow means a lot. And conversely, on the other side, while we are a device management company as well, we sort of as a company can't kind of unsee the pairing, the connection between a worker, an identity, and the device that they're on. That is sort of the new office. The work we're doing in that ecosystem from a partnering perspective, CrowdStrike in particular, who is a strategic investor in our Series F round, starts to demonstrate, the intersection of why identity matters, even at the device level. So again, go back. The principles of owning access control give us these incredible go-to-market opportunities through those strategic partnering channels. So we kind of, like that position, if you know what I mean.
I do. It's fascinating. And Neha, I would love your opinion as well. I mean, certainly kind of having more use cases, having more workflows, as Greg talks about, sounds very logical to me. You also hear a lot about like Salesforce App Store and Apple, and there's lots of others. There's different other ways to kind of build an ecosystem in a community. What have you seen that's worked, that's been effective at scale?
Yeah, I think the network effect and integrations, and I think what the customer really like. And again, this is not coming from somebody who's actually sold that product, but in my view, what you need is something that works as a workflow, and something that you don't really need to integrate a bunch of different products around. So I think in terms of companies who have done it well, it is just anticipating that kind of need, making that whole process easier. And again, to the point I was mentioning earlier, you do need that product market fit and understand your customer profile to be able to build that kind of an ecosystem which will ultimately create value and solve the problem that they're out there to solve. So, I just think that it can be done in several different ways with partnerships, with channel partnerships, with integrations, and really build sort of like a network of companies around your product, which, really enhances and makes your product that much more stickier. So.
Yeah, and look, I think the question on a lot of folks' minds these days is we're probably entering a recessionary period. There's certainly going to be earmuffs.
Jinxed us.
There's going to be some pressure on spending, whether that's from investors or we'll see what happens in more demand side of the market. Awesome. Kind of curious to hear your opinion here. Maybe there's companies that are kind of saying all the right things. Maybe they're saying all the right things plus a lot of other stuff they're doing. Are there times you kind of look at a company or signals and you say, this company is actually trying to do too much? I either kind of don't believe them or they're just going to get so distracted it's not going to get the outcome they wanted. How can an investor in the audience start to figure that out? Is there a couple of questions?
Well, I think if you have a lot of capital, it gives you a lot of room to, I can think of an analogy that's probably bad. I won't use it. But, I mean, when you have a lot of capital like the past few years, you can get ambitious on the product side. I don't want to speak for myself. I mean, maybe you all could touch on this. I mean, you've raised a significant amount of capital, and having the discipline to not go out and try and build everything
is probably a skill that's hard earned. Actually, honestly, I'd be more interested to hear your answer to that after raising a ton of capital. I mean, it's like you could go out and build 20 different things. You have the capacity after you raise $100, $200 million. How do you have the discipline to think through that?
Yeah, look, it comes down to how you manage the business. I mean, in our case, I think we've publicly announced we've raised $505 million. We closed the last round last September, and when we closed it, we had $470 million on the balance sheet. So we burned like $35 million in the entire company's history. So we're probably not a great example of like the prototypical company in Silicon Valley, I suppose you could say.
And what's the cultural ethos that it keeps you from not spending?
I think about building a pro-entropic company is what we call it at Coalition, like that can thrive in any environment. And it's like we've been around for 5 years and already gone through like a pandemic, a war, like recession. I don't know, maybe like don't jinx us, right? But we've just grown tremendously throughout it. And I think the best teams know when to open themselves up to new opportunities and go really hard at them, and then close and just execute the hell out of it. And like SpaceX is a great company that does that, right? It's like Starlink, opened up, we're going to go build this thing, close, and then just execute the hell out of it. And so from my perspective, it's just how we manage the business. I think the best piece of advice I've ever been given as an entrepreneur is once you sell it, you never get it back. And so we've taken on very little dilution in the entire company's history, despite the amount of capital we raised, because I think 3/4 of it has come within the past, year, 2 years. And it's also just nice to have a big balance sheet, because when bad things are happening, it helps to sleep soundly at night. It allows us to do acquisitions as well. Like we did a $200 million all-cash acquisition, and we're a 5-year-old company. So you can just do things that other people can't. And we won that deal precisely because of the financial position we were in.
Amazing.
And Greg, how does that resonate with you? You've been in JumpCloud. You've also been in other startups. How do you approach some of those spend decisions? And I am curious from the builder perspective, but also how you would advise an investor who's meeting a lot of companies and trying to ask some of these questions.
We talked a little bit about this before. Axioms mean a lot. So every sort of company I've worked at, some have worked very well, some haven't worked well at all. But they all had some grounding philosophies. And we do a lot of writing at JumpCloud, literally, probably too much, but really putting on paper actual axioms, which I promise you the majority of our our employees can preach back. So if you don't have those things, it's generally Wild West. I don't know how you can instantiate your business plans in each of the various business units without like a core grounding thing. So in our case, building one directory to rule them all is our internal axiom. Okay, what does that mean? We cascade that out. These are the definitions, and all product plans are driven from that. Yes, it is Tolkien, one directory to rule them all, right? So I think that the tough part is I've been asked this actually a number of times today. Okay, JumpCloud, we've heard about you. You're doing well. All these things. What keeps you up at night? And I promise you, in the scale that we're in, this hyper growth scale, like almost inflexibly, I'm like, the existential threat is us. Like, it is not mentoring and bringing these new employees gracefully into their roles and everything. So the amount of emphasis, and this did not happen at some of the other companies I work for. This is like a really hyper focus for the executive management team at this company, is the onboarding experience and the training and investing in our L&D group. Sort of a very tangent way to answer your question. Like, these things have to happen now more than ever. Have a plan. When talking with investors, you show them the plan. They validate the plan. It is very Socratic, the type of relationship that you want to engage. We all agree that this is what we're going to do, right? Right. Then it is easier to demonstrate where the bigger bets can be placed. We're placing a massive bet here. Run rate of the business is here. And if you have those sort of grounding philosophies, it's remarkable, even in your investor syndicate around the table trusts the management, right? So That's our operating kind of thesis.
I mean, I love it. I mean, from the outside perspective, right, your first product, at least the directory service, is very much going against kind of Microsoft and Azure and Active Directory.
Yeah.
And, that's a big bet, and obviously of itself. And there's probably ways to deploy capital inefficiently or efficiently going about that, and sounds like you've made some good decisions along the way.
Yeah, keep it interesting.
I'm also reminded of the kind of cultural point, right? Like there's that quote by Peter Drucker of culture eats strategy for breakfast.
Yeah.
And it sounds like that's something that kind of resonates with your organization. Joshua, did you have some kind of similar processes? Or did you write a lot? Do you have like company wikis, and do companies onboard to that? Do you have the Amazon style 6-pager? Do you do any of that philosophy, or is it kind of more simple and basic than that?
Yeah, no, absolutely. I mean, the first document I ever wrote in the company's history was the culture document. And in part, that was informed by the experience I went through at Cloudflare, where I was on the founding team, and obviously a very successful company, but there's lots of fun things that happened to get there, and interesting personalities and decisions. And so I learned a lot about what to do and also what not to do. And I think I wanted to be deliberate about it because, culture is something that could become a pain point as you scale. And I'm unapologetically plagiarized, I think, our culture. I was handed this book by my former boss, George Tenet, who was the director of CIA. And never mind that during my polygraph, I was getting grilled on, I admitted that the worst thing I'd ever done in my life was plagiarize a paper in the 7th grade. I'm like, do you think we want plagiarists at the CIA? And all I did was plagiarize things while I worked there. But never mind that. I did the same thing with culture.
This isn't recorded, is it?
Yeah, we're not, but I've admitted to it. There's a great book called Legacy by James Kerr, and it's about the New Zealand All Blacks. It's like the most winning sports team in history. They have more international wins than any other team on the planet, and it really dives into the culture of that team. The entire culture of Coalition was basically ripped from this book, I say unapologetically. I was actually just on a call with James Kerr yesterday at one of our investors' LP meetings where they brought him in. But highly recommended. It was game-changing for me, and also for George Tenet if you need even someone of even more prominence to attest for it. But incredibly important. It's been incredibly important to attract talent. Sending out that document and what we wrote, even though it was plagiarized, has been probably one of the most successful things that we could have ever done to attract great hires. It's reasons why people have decided to join us. It's why they stay. Of course, culture isn't what you write, it's what you practice. So you have to really take and ingrain a lot of those things into your rituals as a company, and we have lots of those. Not quite like the haka of the New Zealand All Blacks, but something similar.
I'm going to hijack a question for both of you, because it's clear that you're talking about a Tolkien, vision and clarity, and then Josh is talking about this really cool book. But this part of this conference is an investor conference. This gets to your point, Jed, which is, how do you diligence culture? So, and were there any examples from anyone on your cap table that diligenced the culture? You can certainly diligence the founder. You talk to them, you want to walk, feel it out. But that's a good indicator, but it's not the only one. So I was just curious.
Definitely informs a lot. But I've worked at startups that didn't have a culture document and those that did. So maybe even just the presence. It's did you even think about this? Again,
do you have a culture document?
Do you even have one? Have you thought about this? And it's hard to be deliberate about something if you haven't written it down.
You don't see it in data rooms that often, do you?
You
but
not.
It's funny. I'm thinking aloud. It really should be a question that's asked. So
it's powerful.
Maybe it's my homework.
It's true. It is, I would imagine on your side of the table, or for the investors in the audience, if you don't know what's under the hood of that business, and what is under the hood of that business is its people, then what are you really buying, right? Of course, I'm not talking about very late stage PE, tuck-ins where EBITDA rules and people, are a second factor. I'm talking about meaningful acquisitions that are going to force multiply a bigger business, right. And those people better stay, and that is rooted in why they were there to begin with. Mm-hmm. So writing the document is one thing, but doing the work with your people, actually with your people, and being in the room, now virtual rooms, which kill me, but we're learning all together how to do this. is meaningful when they know you're there, when something goes bump in the night and you're with the DevOps team, or you're with a sales rep who's trying to close a big deal in India across, the ocean. Those are the moments that matter. You know what I mean? Yeah. There is no ivory tower anymore.
Did any of your investors diligence your cultures?
Oh yeah, big time.
Yeah. In what
Yeah.
ways?
Well, they, a lot of down in the echelon of the company on the later stage investment rounds, for sure. They wanted to understand the people motivation, like, what is the leadership like? Is the investor being sold a bill of goods, or do they really do these things? And yeah, for sure that happened.
It's good to see.
Yeah, I mean, in our case, I think it was just feeling out the CEO, so there wasn't a lot beyond that. Where it started to come up is we've been remote first since we started, which was before the pandemic. And so that was a novelty at the time. And then when it became necessary, a lot of our investors came to us to just ask, like, how we did it. And that's where we started talking about the culture. I started talking about this book, which led one of our investors to actually fly him in to do like a whole thing for their team. And I was like, I didn't even realize that was an option, so we should fly him in. But the deep pockets, right?
And I realize we're running out of time here. I'll ask one more question. If anyone in the audience has questions, just please raise your hand. We'd love to hear from you. There's a big security conference coming up, RSA, here in 2 weeks. Tons of companies presenting. There's obviously the floor. There's lots of meetings around it. I would love to just kind of go down the line and say, what's one trend or type of company for the investors and other folks in the audience that you're excited about that's maybe not, in your direct domain, not something your company's doing? Like, if you're an investor going there, what's a trend or other facet of a company you should look out for?
I will start. I think I am obsessed with some of the markets that are focusing in on basically the leveraging of data to make informed threat decisions, where the threat actors are, pattern recognition in data. Like, that is fascinating to me. And there's just a surplus of data now that you can commingle to get better identification of companies. And the one thing I will say is, this is not just an enterprise problem anymore. I mean, the SME is under attack as well, and this stuff you'll watch get commoditized, the pricing will come down, it won't be such an enterprise thing anymore. It'll be sort of inherent to a lot of solutions, I think. I'm fascinated with that.
Interesting. I'm excited by like just boring stuff, because that's what it turns out actually stops claims from happening. It's like email is still the largest attack surface for a business, 20 years later, and companies still don't protect themselves. So there's a lot of email security businesses that have gotten funding recently, and anyone who's reducing the friction for businesses to do that, I'm like a huge fan of, because it's like one of the single greatest pain points. That's kind of where my head goes, is just like the boring stuff. Like, we love MFA. The insurance industry loves MFA. It's like one of the single most effective controls. So anyone who's doing that, we tend to be very fond of. But it's really the basics. I'd say the other are, those MSSPs that are, again, reducing the friction to onboard, that are able to help businesses, even small ones, because in the position we're in, like, there is a massive need. And so there's a handful of companies like the Arctic Wolves, I think Expel, Dave Merkel's here, doing some work in that space. If they can crack the code on that, there's a big opportunity.
Yeah.
Yep.
I mean, I completely echo the MDR, MSSP kind of space. That obviously, when done right, I think it can be incredibly valuable and can make security accessible to companies of all sizes. But I think the other trend that I'm very excited about is sort of the human layer security now, right? Like, there are companies who can anticipate from the behavior of people whether there is a threat that will happen. Historically, it has all been about, like, how do you leave data from leaving your organization, or how do you prevent attacks? But now we have gotten to a point where behavioral analytics and can help you predict like that kind of behavior, which I think is a pretty interesting thread to pull on. And there are a few companies that I've met here as well that are doing a pretty good job of it. So excited to meet more companies in that space.
Big surprise that Okta would be looking at the same things JumpCloud is. But yeah, this broadly generically called sort of zero trust architecture. But how do you mesh all these different signals, right? And that's something that's super important. So what device are you logging into? Where are you logging in from? Et cetera, et cetera. Actually, if you look at all the major technology players today, we all have really good data in silos. And so we have to combine that together to create essentially a risk score for different activities, and that allows for different levels of authentication, authorization, et cetera. That's the big opportunity that presents itself over the next 5 years. But there's other things we were talking about too. I mean, context and signal and data, it's like, if you look at some of these tools like Gong, for instance, which I'm a big advocate for, I mean, it's just really fascinating to see what you can learn in the field. So this whole concept of like, what's voice of customer, right? Or even what's voice of expertise. There's another tool that maybe a lot of folks here know called Tegas, which is essentially an expert network plus Gong having a baby and creating a whole new tool where you have 20,000 expert calls in a database, and you can pull up and learn very quickly about a new product category. So it's just amazing. It's like we used to sort of sit there and scratch our head and wonder what the voice of customer is, and today that is accessible data, queryable data. You can see trend analysis on it, and the same thing goes for new industries. So the pace of innovation is just really accelerating fast.
Demonstrates how Salesforce is the granddaddy of these kinds of platforms, and we use Gong as well. It just shows you partner programs, big notable companies like Gong now that are just plugged into that basis of where that data is generated in Salesforce. It's crazy.
Yeah, and then Salesforce, of course, is a platform that goes out and buys Slack, which is a platform to connect the other platforms.
So meta.
Exactly. You have this like incredibly meta situation where, that's definitely. I was asking before rhetorically, what's the next phase? But it's platforms buying platforms.
Yeah.
So that's clearly where we're headed.
Yeah.
Platforms on platforms. We'll end it on that. I realize we're 5 minutes over, so don't have time for Q&A, but our panelists will be around the summit. And Neha, I want to be cognizant of your time. You're moderating a panel right after this.
Yeah.
So let's give them a round of applause, please.
Thank you.